Live by Peter Schiff, CEO of Euro Pacific Capital Company. Now, what's your reaction to the eventful trading from today?
Well, certainly did not expect this big a move down in the price of crude oil, but I don't think it is sustainable. I think that a lot of the, heavily indebted energy companies are clearly going to go bankrupt, and so ultimately those that survive will be in a position to make even more money as the price of oil rebounds, which I do expect to happen. I think a lot of people are missing the fact that the Fed is going back to zero, they're going back to QE, or they're going to ramp up QE, and I think the U.S. dollar is going to fall rather substantially, particularly against a lot of the emerging market currencies, and these consumers are going to be big buyers of oil. So I do think that you're going to see a big increase in global demand from a falling dollar, which ultimately is going to power the crude market to much higher prices.
Now, we've seen some accusing Russia of starting an oil price war, but Moscow says that the OPEC deal was not an offer that just wasn't profitable. So who is to blame here?
Well, I have no idea. I'm not privy to those meetings, but, cartels are notorious for having a difficult time sticking together. So I think in the meantime, people will get the benefit of having some cheaper gas prices, but don't get used to it because it won't last. People shouldn't go out and buy a big SUV because they think the gasoline price is going to stay down forever, because it won't. And, a lot of Americans, maybe they think it's good that they're not going to have to pay as much for gas, but a lot of them are about to lose their jobs, so they're not going to need to drive to work anyway, so the savings won't be as big.
Were you surprised at all by Saudi Arabia's decision to go ahead and up production when they were trying to find ways to cut production?
Yeah, it certainly did surprise me. If I was expecting it, I could have been short crude oil, but I wasn't. But I am taking advantage. I haven't bought any more oil stocks today, but I do think, again, when the dust settles, the well-capitalized companies are going to be in very good position to take market share. The real problem in the U.S. economy is all the debt. We have so much debt, not just in oil companies, but, in all sorts of companies. And everybody is missing this. All of the analysts that are looking at the stock market can't see the bubble for the pin, because the problem is the debt bubble. It's not the pin that pricked it. If it wasn't the coronavirus, it would have been something else. So the air is now coming out of the biggest financial bubble the Fed has ever inflated. And the big difference between what's happening now and 2008 is this time they don't have enough bullets left in their gun to reflate a larger bubble. So now we're going to have to deal with the full aftermath of this coming crisis.
You've talked about the debt. You've talked about people losing their jobs possibly through all of this. Who do you think will be most affected by this price war?
Which nation? I certainly think the U.S. will be affected. We've built up this huge fracking industry, and I know from experience that, it's very expensive to get this oil out of the ground, not only to frack the wells, but to pay the cost of maintaining the wells, refracking them, and the production really has been very disappointing. You get a lot of production early on, and then it rapidly declines. And so a lot of these companies have a lot of debt, and they need oil prices much higher than where they are now, really $50, $60 a barrel, kind of at a minimum for a lot of these guys to survive. We didn't even have that before. Now we're in the low 30s, so this is going to cause a lot of devastation. I'm wondering if the U.S. government is going to try to bail out the oil industry. I hope they don't, but they may bail out a lot of other industries too, like they bailed out the banks in 2008. But you know what? They may have to bail out the banks again. If you look at the banks today, all the banks that they claimed were too big to fail in '08, well, they're a lot bigger now, and I think they're all going to fail again.
You talked about the fact that it could have been coronavirus. It could have been anything that's really popping this bubble at this point. But at the end of the day, it is the coronavirus at this point in time. Do you think Saudi Arabia's decision to up production is actually making everything more unstable?
I have no idea. Clearly, it destabilized the oil market and the oil stocks. But there's certainly, again, segments of the economy that should be benefiting from lower oil prices, and they're not. So it's not about Saudi Arabia cutting or increasing their output and cutting prices. The larger issue is the debt bubble that has popped. And what we're watching now is the bubble deflating, and maybe the drop in oil prices is part of that deflationary process. But ultimately, the Fed's going to get it all started again, because when they go to zero and when they ramp up QE, the bottom is going to fall out of the dollar. That's the opposite of what happened in 2008. In 2008, the dollar went up because everybody was buying it. This time, the dollar is going to tank because everybody is selling it. And this commodity bear market, including what's happening in oil, is going to be very short-lived, because once the dollar starts to collapse, all these prices are going to rise, including the price of oil.
Russia says it has enough funds to support its economy for a long time still, despite the oil prices. But how long do you expect this economic drop to last?
Well, I don't know. I mean, I think certainly Russia wants to pound its chest and probably, posture itself in a stronger position than it actually has. But again, I don't think the oil price is going to stay down too long. I mean, it could be a matter of months, but ultimately I expect a very sharp rebound in the price of oil once we get a collapse in the value of the U.S. dollar relative to foreign currencies. And I do expect the price of gold to take off as well. And I think it's very rare that you see this big a disparity between the price of oil and the price of gold. And I don't think this disparity is going to be, taken away with gold prices coming way down. I think it's more likely that oil prices are going to eventually go up to catch up with gold.
Do you think Russian fears that the OPEC deal will open the gates to U.S. shale oil are grounded?
Open the gates in what respect?
Making it more possible that that's going to take over the market.
I mean, it's not an opportunity for the. No. I mean, this is the worst thing for you, or shale. I mean, shale needs higher prices. The problem is a lot of companies are going to go bankrupt from this decline. Even if it only lasts for a few months, these companies can't make their interest payments on their debt, and the banks are going to have to, foreclose on the loans because the collateral for the debt, their oil reserves, will have just imploded in price. So this is going to become a real financial crisis in the oil patch. That's why I thought that maybe there'd be some kind of government bailout to try to prevent that from happening. But everybody just assumes that when the oil price comes back, the production from the U.S. shale industry is going to come back. It's not going to come back if the producers have been driven out of business and there's no more investment capital to try to start the process all over again, because the investors in that area have had such heavy losses. They're not going to be quick to come back to the table just because oil prices have come up when they know how quickly they can come back down.
We've been speaking with Peter Schiff, CEO of Euro Pacific Capital Company. Thank you for your time and your comments.